All right, here we go. We're working on our mutual fund worksheet. This is really, I've kind of converted it into an index fund worksheet. So, name of mutual fund. Really, I'm going to change that to name of index fund. I don't really deal with mutual funds anymore, so I don't expect you to either. Index funds are just way better. We don't have to pay a whole lot of people to do those. All right, so when we look at this, if you want to go back to your Warren Buffett worksheet or article, you had to pick an index fund and show returns, the name, the fund family, so on and so forth. But for this, I'm just going to, you can use that same one. That's fine. I'm just going to type in Vanguard Index Fund, and it'll show me, here we go, Vanguard 500 Index Fund. That's a great one. I actually own that part of that one. I don't own the whole thing for sure. You could also just, hey, Google best index funds. That's right. Vanguard Total Market Stock Index, Fidelity, Vanguard 500, Schwab, Vanguard High Dividend, right? I'm a Vanguard fan. It's all good. That's just the fund family. All right, so the Vanguard 500 Index Fund. This is investor shares. Here's your ticker, VFINX. Here's our stock price, 275.84. Let's look at our max chart here. Make sure, oh, yep, that's really good. We want to see this upward trend. So let's go back to our worksheet. And again, you have the name. I already talked about that. We found the ticker symbol. We found the current price. Now we're looking for year-to-date return. So year-to-date return, YTD return, 18.25. So within the last year, we're looking at 18.25%. Best 1 year and worst 1 year return. So we're going to look for our performance chart. And under our performance chart, you're going to notice two numbers. One's going to be a positive number and one's going to probably be a negative number. So our best 1 year return through 2019 is 32.18%, and our worst 1 year return is a negative 37.02%. A lot of people get confused and they say, well, how can 2019 be the best, 2019 be the worst? That's just through 2019. Okay, since the fund's inception through 2019, this is the best, this is the worst. So if we go back to the chart, we can look at our max chart. And from here, we can try to figure out what our best year was. We are probably looking, okay, 2008 was a pretty crummy year because the economy, boom, big dip. So 2008 was probably one of our worst years, if not the worst year. And then we have a lot of really good years. We have 13 to 14, 14 to 15, 16 was kind of a bummer, 17 to 18 was great growth, 18 to 19 was okay. There's a lot of good years in there. We don't have to pick one specific year. We just know that the stock market fluctuates, and that's okay. We're betting on all of the stocks within the Standard & Poor's 500. There's 500 stocks on this index. We're investing in all 500 of them, saying that we believe in the economy. We believe in the companies that are on this exchange, and we're going to put our money into all of these stocks rather than just one stock or one business. We're going to diversify across the board. Okay? Moving on. Minimum initial investment. So, sometimes for these, we actually have to purchase a certain amount just to get into this investment. So if we look under purchase info, our minimum initial investment, sometimes it might be $10,000, it might be $5,000, it might have no minimum initial investment, but it also might be $100,000. For this one, it's fairly simple. It's straightforward. Minimum initial investment is about $3,000. Not about, it's exactly $3,000. Okay, you find that under the purchase information. Next. Name of fund manager. This is the person that actually runs this, and I believe we can find this under profile. So we find that Michelle Louie is the lead manager since 2017. All right, that's pretty easy. Fund family, super easy. This is run by Vanguard. It might be run by Fidelity. It might be run by Charles Schwab. It might be an E-Trade. Okay. Usually they will say the fund family. That's going to be the very first word that identifies what the index fund is. Cash, stocks, bonds, other. So what makes up this index fund? just about all index funds are going to be made up of stocks. There might be a little cash, so if we go to the holdings, we'll see that 0.36% is cash, 99.63% are stocks, 0.01% bonds. Okay, so that is how our fund is comprised. Very easy there. And we go to what companies are we actually holding? What are the largest 5 companies that we are holding? Again, we will stay in holdings. We'll just scroll down a little bit, and we will see this fund is made up 4.2% of Microsoft, 3.74% of Apple, Amazon 3.1%, Facebook 1.88%, Berkshire Hathaway 1.55%. Those are the top 5. JP Morgan 6, Alphabet, which basically runs Google, 7, Alphabet A-Class, Johnson & Johnson, ExxonMobil, really large blue chip companies. These are all good investments when you're looking for the stock market game things to invest in. Okay, so you might take a little snapshot of that. But it just asks for the first 5. Then we come down to the fund summary. And I believe it's under profile. I apologize if... Nope, there it is. It's under profile. Here's our fund summary right here. We're looking for 2 to 3 sentences. So basically summarize this fund summary in about 2 to 3 sentences so we can understand exactly what we are purchasing. Next, how would you define an index fund? That's for you. Why do you think that purchasing an index fund may be a good investment? I might talk a little bit about diversification and not stock picking or gambling. Just a suggestion. You go from there to advantages of picking an index fund. Really pretty simple worksheet. Again, go through everything. Understand index funds are fantastic investments. They're great. Since the 60s, I want to say like 1963, index funds have returned on average 9.9%. Okay, better than the market since its inception of 9.5%. Since the 60s, it's returned 9.9%. I will take 10% on my investments all day long. That would be fantastic. Love it. I'm not trying to time the market. I'm not trying to stock pick. I'm not gambling. We're investing within a market, within an economy for the long term. All right. Finish these worksheets up. Have a great day. See you guys.